So today we're going to start our configurations on that part. Okay. So in real time, we may not be participating to create tax part. It completely has to be taken care by the tax consultant. But this is for an understanding how to create, how to test, etc. The first task is edit company tax details. So let me create one dummy company because we need company data here. This is covered as part of your core HTML. So your company ready. The first task, edit tax. Company tax details. This is the first task in the tax setup, eight company tax details. Here we have to select the company. So which company, the one I created, I select. Why we are selecting company? Because we will assign employees to this company. So here the headcount is currently 0. We'll assign the headcounts to this company. So all these employees will fall in the tax. That's what all employees in USA group that falls under this tax setup. Select OK. So go to the tax IDs. So this task also needs to be accessed by the financial companies because they want to capture VAT, etc. But we are not configuring with third party. We are configuring for our own tax. I mean payroll related. Select tax ID. Go to the arrow button. For which country you're creating this tax? USA. What is the tax ID type? Federal Employer Identification Number, FEIN. These are state taxes, sales tax. So search for FEIN or employee ID number. Enter the employee ID number. So this unique number has to provide by the IRS. So whatever they provided during start of our business, the same ID, we will map it here. So we are going to perform all the transactions on this ID. If any cash inflow, cash outflow, if you're paying any taxes to the employees, you're going to track from this transaction tax ID. And if it is the primary tax ID, we can also select this checkbox. Okay. What is primary, secondary? Secondary means mergers and acquisitions. So I will highlight that point. At this time, it's a primary transaction, primary tax ID, and we are going to use this tax ID in all the government related documents. Okay. Simple configuration. First one is for which country we're doing this and what is the tax ID for based on the country, automatically the values will be available. Example, if it's like India, whatever the tax IDs in India, those are available here. TIN, CIN, tax identification number. These are all state taxes. Only one country tax only we have to map, not both. So normally this needs to be configured by the company and this needs to be configured by the financial guys. Okay. The first task, we have mapped our FEIN number. Now move on to the next task. Federal, edit company federal tax. Let's configure federal tax here. The second task is access, edit company federal tax, US. So company, we created one, select that value. This is just for a demo, how to call companies and configure. Now here we have to configure the values. Now let's configure. Start date. So start date is nothing but by default a go live date. Whenever we plan the go live date, that date. So here two things, man. Supplemental tax method regular check, supplemental tax method separate check. So employee have on cycle, off cycle. Okay, we have not mapped anything. That's why it's okay. Software attorney. So supplemental tax method regular check, supplemental tax method separate check. We have regular wage. We have off cycle wage. By any time, tips, incentives, variable pay, commission, bonus. If the customer is giving a separate check for off cycle payments, so please select what tax method is going to be adopted. The standard method or flat rate. Similarly, for regular wages, so I'm selecting standard withholding. Means every quarter, every month we hold, and every quarter will pay. For separate check, for supplemental wages, for separate check, are you going to take a flat rate or aggregate standard? So just want to give an example. In India, if you see, if we are receiving any bonus, there will be a flat 30%. Correct, ma'am? Flat 30%. If you're
Yes.
receiving a salary, right? If you're receiving a salary, that salary amount will be falls under 0 to 5 lakhs, sorry, 5 lakh to 10 lakhs, 10 lakhs to 20, 22 lakhs to 30 and above 30%. So that's what he is saying. For off-cycle payments, would you like to process aggregate standard, which means include the tax along with the regular tax, or the off-cycle payment you are going to deduct a flat rate? So that we need to select. Okay. Right. Here, exempt from FUI, Federal Unemployment Insurance. Does this organization is exempted? Employer and employee no need to contribute any FUI payments? If yes, select the checkbox. It's not applicable for all the employers. There are certain employers means charities, any medical colleges, or any what do you call child protective organizations. They have some certain exemptions, they no need to pay. If you have exempted, automatic system will avoid to calculate those wages. Third party provides wage to for sick pay. This is applicable only for the employees who is working in New York location. New York location, they have mandatory and additional component called wage to for sick pay. Okay. So is there any third party provides wage to for sick pay? If this you have an organization in New York, and this is one of the mandatory, hence select the checkbox if it applicable. They will ask you who is the third party insurer, agent name, third party tax ID. If none of them, a company only providing the insurance for the employees who unselect this, is a company one, there is no third party insurer up to customer card. So move on further. Kind of employer. The customer, what is the customer nature of business? Why this question? Because as I said, certain exemptions, charities, certain universities, colleges, or medical colleges with service. Okay, here certain sections. Federal government, none apply. 501c non-government, state, local governments. Okay, so one of the value you need to select. If you're implementing for private sector, these are public sector. Let's say this is what you call charities related sections. None of the problem is a private employer. No exemptions applicable. Does company will provide dependent benefits? This company is going to be provide benefits to their employees. If yes, select the checkbox. Allow pre-tax deduction allocation. Allow pre-tax deduction allocation. So if you have any pre-tax, so you may require to do some deduction allocations, like costing allocations, we will say. Do you have that concept? If yes, select checkbox. or all the decisions happen through one of the cost center unselected. Again, customer call. Allow ongoing worker jurisdiction tax allocation. This I'm going to cover here, multiple work tax. So at high level, let's say sometimes in USA, you also definitely heard about this, might be worked also. In US, if an employee worked in two different states in one tax year, for example, an employee worked in Colorado state. Denver, he worked, location is Denver, state is Colorado. For 6 months, he worked. And the next 6 months, he went to another project, Chicago, Illinois. So in 1 year, employee worked in two different locations, two different states. Then this employee is liable to pay the tax for both the states. So would you like to record those ongoing work jurisdiction tax allocations? Select the checkbox. When you enable this will be available. If you disable, if you're not selecting, no. When it is applicable, when it is not applicable, if employee not traveling anywhere, employees are working only in one location, employees are not traveling to any different states, then we need to select this. So we need to avoid this. So let's select this. And then enable ongoing work jurisdiction tax allocation with time tracking. How do you want to track? How do you want to track employees working in different locations? To the time tracking, do you have a time tracking implemented in your organization? Would you like to track to the time tracking? If yes, select this checkbox. So swipe in, swipe out, whenever you're doing, the locations also will be displayed. Based on that, the tax will be calculated. Enable tax on mapping and location. In position, we will give location information. Will position, we will give the location information. From there, the tax needs to be calculated, work location. And again, exclude 1042S taxes from tax filing. So this is for alien, non-resident Indian, they will call it as a non-resident alien. NRA, they will say. NRA. So exclude taxes from tax filing. By any chance, if any employees can be excluded from the tax filing, select this checkbox. This is not applicable for private sectors. This is applicable for either government sectors or charities. Company name override for year end. Sometimes, for example, this company is called Walmart. At this year, at this moment, you are confirming it is Walmart. Who knows? Walmart can, of course, it never happened because such a big company, definitely. Walmart can do some acquisitions. Can someone, maybe Amazon can buy Walmart. So the company name going to be changed. Acquisitions, mergers. At that time, ways to document, we need to display the new company name as of that day. We have such requirements, change the name here. Okay, what are the new company has been acquired? So that company name we will give it here. So that instead of Walmart, you can, this name will be displayed in the wage to documents. Since company name has been changed, FEAN number also might be changed, right? When company is going to be changed, a federal employer identification number also will be changed. So give I'm sorry, for example, Amazon is acquiring Walmart. So I would like to display Amazon in the page to documents. Then I also need to be give Amazon federal employer identification number here. Okay. And here we have a disclaimer. Workday already maintained the disclaimer in the sense this is the tax. In US, strictly federal government, all the governments should follow the tax rules and regulations. Before any company would like to configure, they have to say that if any system error happening, if any calculation properly not happening, we are not going to sue any people. So something like that. If you want to display default disclaimer, you can select, or you can also give custom disclaimer, a kind of a help text you say. And then electronic wage to filing. So there will be an official has been working with this company who is taking care of all the taxes, etc. You can say vendor, tax vendor. So we can also file electronic wage to filing. So we can give his contact or her contact number and which company they are from. You can say auditor. Okay, that information can be captured here. Straightforward and simple. As I said, this is a pre-configured data. We checked one check or two checks, exempt or non-exempt. Okay, other options. Move on to the next task. Edit company state tax and local. There's no separate tax, state and local. Company Walmart. So how many states the company is operating? If, for example, Walmart operating in 3 states: California, Colorado, Illinois, and Texas. Just giving an example. 4 states. 4 times with different states you need to configure. Okay, because each state has maintained their own taxes. The first thing, Walmart state. Which state will go? Okay, we'll go with California. Now here, state taxes. Add row button. Start date. I'm selecting go live date. End date I'm not specifying because we're not sure when the company will shut. So taxes, residence tax and work tax. State withhold resident tax. Employee also may have to pay work tax. And would you like to use the federal employer identification number, or you want to give some employer identification number provided by California government? Either of the option you can choose. State also will give EIN number. Okay, that's why we have GSTIN, state TIN. Okay, 2 different TINs we have. Do you want to give in India? I'm saying central government CSTIN or state government STIN. We want to give. Even if you see how to say, let's say if you buy something, when you took the receipt, you can see, right, ma'am? State tax, not federal government, central government.
Central and
Something
state.
exactly. So would you like to go with that or state one? So let me say would go with the federal only. Same concept. Supplemental tax method: single check, regular, standard withholding. Supplemental tax method: separate check, flat rate. But I got your question. I will get back to you once again. And this is a new thing has been added, even you didn't find in your book. Because of the COVID, people are switching between the states. And now the question is, whenever employee work location will be different, so work location tax will be differently calculated. For example, if you might heard about New York and New Jersey are very near. Employees prefer to stay in New Jersey because the price rents are reasonable. That is nothing but resident tax. Employee is working in New York, so there they have to pay work tax. It will be deferred. So that's why the new thing has been added. So please exclude this one. I will also explore and come back on this. Even I'm also, this field is newly added in Workday. Work from reciprocity. Okay. Simple and straightforward. So if you see here, Workday does not asking you enter the tax percentage, etc., because each one has their own percentages. Workday is authorized to update. We are not. So see, this pay component Workday is already created. Workday won't. They will maintain certain percentages on this calculation. But we don't have any control to view nor see. Here. Let's do one thing. Okay, we don't have permission to view as well. We can't edit or modify. Okay, Workday will all keep update. I mean, we scroll down, let's count the SUI, state unemployment insurance. So SUI is not mandatory. Employer needs to be contributed here up to employer, but employee is mandatory. State unemployment insurance, SUI, employer.
We are not giving the end date. Will it automatically take, or whenever we are going to add change, then we have to enter?
End date we are not giving now, because until the company runs, we don't know, right? When is the end date of that company? We don't know when is the company will be shut down, right? So there is no specific end date. That's why we have to
But
wait.
till that time, at least there should be some end date, right? After that, we can't delimit like how we will do in SAP system.
No, 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 no. This functionality is, so I started a new entity and I have planned to I have approximately, I will run the business till 2024. So I will give my end date is 2024. Okay. So at this moment, if business, we never know, right, when you will bankrupt, when the company will go bankrupt or close. So that's why we'll always keep it back. Whenever the scenario comes, we will update the end date. Yeah, from there, system doesn't calculate further any taxes.
Okay. So there won't be any logic for the end date. Only based on the start date it will take. If we give the end date, then
Right.
it will stop calculating.
Exactly. Correct. Right. So SUI, employer. So again, you state or federal, EIN. Is this company is exempt from the SUI? If the employer doesn't no need to pay, so the checkbox. But no, this is not applicable for regular private groups. So use employer tax override. Now see here, assume the system already maintaining, let's say, a 4% or 3% unemployment insurance, state unemployment insurance 4%. If you would like to override, the employer right to pay few more dollars. Let's say 5 he has to pay. He can give 5 here. So system in the California, the SUV is 4%, but employer is giving 1% extra to the employees. If you want to override, you can give the number. Or if you want to go by default by state government, whatever the percentage they're giving, unselect it. So system automatically calculates that. Okay. So this also, sorry, go ahead. Yeah.
No, no. Yeah, understood.
And this one again, I will check and come back to you, ma'am. As I said, I never involved in the configurations. These are all state additional taxes. Each states they have their own additional taxes. We will call it as other taxes. Okay. So this is called FUI, employer credit reduction. Again, these two are, sorry, this one please hold on. I will explain. Maybe it's required a configure. I'll try to recollect. This is different to each state. Each state has additionally, they have some certain taxes. You will call it additional taxes, disability tax, etc. California, so it's disability taxes, voluntary plan assessment taxes, etc. So this has to be decided by the customer. So what are the taxes they want? Workday already define all the taxes. Just you have to give what taxes will be employer is deducted. That's all on this page. But this I will check and come back to FUI, employer credit reduction. And on the same screen, if you go to the local, this is called city withholding tax. So by default in California, so which is the tier 1 city is San Francisco. City tax or local, tax authority, SF, San Francisco. Everything is available, just we need to select the values. Use FEN number. That's all. So how it works, if any employee working in the San Francisco and in California, this tax is applicable by default. From where the value is looking, employee position. In employee position, I hope you might remember, in employee, when you're creating a position in HCM, we will define a location, work location. From there, look into that. Okay. And then employee self-service forms. So state taxes when they're paying, local taxes when they're paying, or if there are any exemptions required, we have certain documents. Okay, we have certain documents. So what are all documents? Enable all the forms. So employees can download all the required forms. Okay, And whenever they're filing or downloading a document, if there is any point not issues or errors, it's like they will say, yes, we know there might be some issues. It's a kind of a disclaimer. So to make it simple, if you remember, if you join any company, when we give the provident fund, there are certain documents, PF transfers, PF, what do you call, claim. Similar to that, each state, they do have the certain documents, proofs there are. Okay. So if you're looking for only particular documents, you can select those documents. It will be available here. All are delivered by Workday again. Or if you can allow the employees to download all the documents, what are eligible, select the checkbox. Now, the next point is tax selection for workers. So once you set up the taxes, we need to assign these taxes to each employee. Whenever you're hiring an employee, we will trigger a BP called tax selections, and certain taxes based on how we are configured will be defaulted. But let me show how it works. One of the most, at least we should know what data we need from the customer in order for tax detail. So worker action, maintain taxes, go to the payroll, assign tax selections or add US tax selections. Effective from 1/1/2022. Currently, work state is California, home state also California. Residence tax, work tax is from California, is calculated from California. Where these values are coming in, if you go to his position, location is SFO. San Francisco is part of California. From where this location is coming in? From the position. Okay, like that will default. Now let's go back and assign the taxes. Payroll, add US tax selections, adjust the dates. So okay, let it be. So for now, only California. Okay, additional taxes for multiple work type jurisdictions. If an employee works more than one state. So this is the current elections. Ignore. Let's talk about all these. So select the add row. First, federal, state, local tax allocations, mappings. Add row. Is this employee is married or single or separated? So here are options. So here, why these details are required is the federal government wants to know, is this employee is submitting taxes separately or along with the spouse is separate, he or she submitting the tax. Okay, I'm selecting married or okay, let me single or married filing separately, or married filing jointly. Okay, one of the or head of the household, which means spouse is not working separately, he is submitting, he or she. Okay. Number of allowances is nothing but dependents, certifications, we will say, number of dependents. So why do we need number of dependents? Because you can request for tax exemption. Okay. Then extra withholding. Extra withholding. For sometimes an employee can prepay the taxes. For example, let's say my compensation is 10 lakhs. And on an average, I require to pay 2 lakhs as a tax per annum. So every month my company is holding around 12,000 rupees per annum. Sorry, not 12,000. Okay, let's say 10,000 rupees from my salary. Now what I told, instead of you deducting from my salary every month, let me pay the total tax. Okay, it's a kind of prepaid. I will prepaid the total tax to you. You will give the full salary to me. Of course, not sure in India it will applicable, but you have an option like that within USA. Okay, you can pay the tax in lump sum, take your full salary. If that is the case, you can just put what is the extra withholding you have paid to your organization. That information will define here. Multiple jobs or spouse works. In India, we have to work only one job. That's how the agreement jobs and we will do. But in that country, an employee can work more than one job. At the same time, it's a flag, something like to know the employee is working only one job or more than one job. Employee spouse also working or not. Okay, this is the flag. So the federal government have an idea how much he is earning from each job. Total number of dependent. So how much you're spending approximately for your dependents. Why? Because whenever you're exempting for educations or loans, so they will calculate total how much you are spending from your wages on your dependents. Is there any other income you have? Rentals, lease, or any business? You have any other income? How much it is that? That will maintain here. Employee. So is there any, apart from the tax deductions, do you have any other deductions? Do you have any other deductions? What is those deductions? Total how much is deducting? Let's say paying loan amounts, loan repayment, salary advance payments, health related. So we can define the deductions here. Are you a non-resident alien? As I said, NRA, you select the checkbox. Are you exempted? If you enable the checkbox, then only it will be available to select. If you're non-resident alien, select this. So which means you are not US citizen. Okay. Then exempt from NRA additional amount. So there's a minimal tax is for NRA. So are you exempted from that amount? Oh no. Are you exempted from that amount? If yes, we will select the checkbox. So in which scenarios people are exempted? Any disabilities or a percentage of physical disability? Okay, at that scenario. Or you had joined as a doctor, you're joined as a research associate. So you might be exempted from another additional amount because you're providing services to the country. And then lock-in letter. This is the interesting and important one. So in India, in example, in India, first, whenever the tax year will start, April, let's say March is done, April is started, all our companies will say submit your what we will call. So we'll ask no ma'am, this much you are paying house rent allowance, tax declaration. Yeah, tax declaration we will provide. I will say, so I have these many dependents, and I have tuition fees I'm paying. I bought a two-wheeler which is electric one. I need subsidy, and I'm paying insurances. I have medical bills for my dependents, etc., etc., etc. I will tell so that I will get lesser. If I'm not showing the proof, they may deduct my entire salary. And at least what are the tax has been calculated. Now, similarly, lock-in letter. The same concept Workday has not Workday. In India also we have a concept called new tax regime. Two things: old tax, new tax regime. What new tax regime says? You say honestly what you are paying. Based on that, we will deduct. You no need to submit any tax submissions at the year end. But once you opted for tax regime, you cannot change the tax regime for this current year. So similar to that, lock-in letter means whatever the proofs you have submitted, you are no longer allowed to change in mid of the year. That amount is going to be calculated till your end if you opt in. Okay. Exempt, by any chance you are exempt because of disabilities or other reasons from the federal government, select this. No wage, no tax. Some employees may go on long leaves. sabbatical leaves, 6 months, 1 year. You don't have any salary, you don't need to pay any tax. Or an employee met LTD, long-term disability. Now, here, unemployment insurance is straightforward. All are predefined, as I said. We'll select the employer row. If you're authorized, FUT election, Federal Employment Tax Authority election, you can just select, or if any chance, if you're exempt with some reasons, okay, you can select exempt from this tax. Okay, similarly, FSCA, Federal Insurance Contribution Act, Medicare, and OASTI, as we discussed. So if you see here, we no need to select any percentages nor values. Workday has immediately removed yes, not to position. So position will be removed. Now, can anyone help me why we have position here? Tax should be calculated on the worker, right? Why on position? Because sometimes an employee may hold two positions, correct? Two positions. In that
Right.
case, which position you want to calculate the tax? That's why we have this option. When you start apply to worker, which means he's holding only one position. So we don't need any position detail. Again, is this employee is exempt from this tax from the Medicare? Select. If yes, what is the reason? Provide a valid reason. These are also available. What category rules, etc. Okay. And similarly, old age savings deposit insurance apply to worker, not to position. Is this employee exempted? If yes, what is the reason? Okay. And this is about federal. Now let's move on to the state tab as well. State tax. In the state tax, California withholding, so employee work location from this state has been fetched. Add a button, again same thing. Is this employee married or single or filing jointly? Oh, sorry. It's married or single. Okay, you can select the value, number of dependents. You can also see the help text from Workday just over the cursor. Allowances are nothing, allowances or certificates are nothing but dependents. Estimated deductions. Okay, approximately what is the estimated deduction for the current year? Additional amount, if there is an amount, your incoming amount apart from salary. Lock-in letter means standard tax, the new tax resume, something like that. Once you select the lock-in letter, Workday doesn't let you allow to change. Not only Workday, that's how ERP has set up. No ERP will let you allow to change. And exempt by any chance, if the employee is exempted from the California withholding state taxes, select the checkbox. MSRR means military services. Okay, military spouse residency relief. If any of the colleague, any of the member in the family, or either one of the spouse is a military services, they will have get some benefits, exemptions. Okay. And if you're on long leave due to sabbatical or any other long-term disabilities, no salary, no tax. Similarly, this is also unemployment insurance, FUTA, it is SUTA, State Unemployment Tax Authority. So if it's simply you have only one option, exempt or non-exempt, but if you notice any value here, we are not seeing what is the percentage tax will be calculated because those values are maintained by Workday. Okay. And other taxes are nothing but additional taxes. It is not constant for all the states. It will different to each state. So customers will provide what additional taxes they would like calculating. So those values we can give it here. And this is local or city tax. So it's California, so San Francisco. If any employee working in SFO, employee may require to pay the local or city tax. This these details also I am not aware. Sales and tax can never configured or tested, but I will explore and come back to you on this. Okay, but one thing you know aware, if any employee joining in mid or mid-year, so we will call it as mid-year tax adjustments. Okay, so those details will capture, but full details will come up with in the next session on this local tab. And tax allocations means if an employee works more than one state in one tax year, employee is liable to pay that tax in both the states. That will record here. Select the arrow button. Let's say, I selected future date. It's okay, not a problem. In California, so he worked in a state, city, let's say San Francisco. System is too slow here. San Francisco. Looks like it's got hanged. Just a second. Here we'll assign the percentage. Percentage in the sense, let's say 6 months the employee worked in San Francisco. 6 months the employee worked in Chicago. We'll record the percentage. 50% he worked in 50% he worked in San Francisco, which means 6 months he worked in San Francisco. And again, add one more row. I'm just giving the future date. Let's say from July onwards, he's gonna work in Chicago. If you have a time tracking, Workday has the ability to calculate exactly and default the values. So state will be, and it is too slow today. So Illinois, then the state will, I mean, city will be Chicago. And let's say 6 months he worked in Chicago, we'll give 50%. So one point we have to remember here is, one point we have to remember here is make sure the both should be 100% or more than one, whatever 3 or 4 states he working, but all together should be 100%. It cannot be more than 100 or less than 100. Okay, so that we can calculate certain multiple work duration taxes on this. 50% it will goes to the Illinois because he worked 6 months there. 6 months of tax will go to the California. Okay. So any question, ma'am, so far here? And federal, state, local configurations are what are the fields we discussed?
How do you know what percent each one is?
Good one. If you want to track automated way, we must have a time tracking system. If you don't have, then this is how we have to calculate the total number of working days by employee, in which how many days the employee has worked. Based on that, we'll arrive at some percentage. For example, let's say 365 days we have, excluding Saturday and Sunday, 260 days. Sorry, somewhere around 260 days. Let's say out of 260 days, 100 days he or she worked in Chicago. 160 days they have worked in uh, Denver, Colorado. So 100 divided by 30, right? 100 divided by 30. 3 months, 10 days somewhere. So we'll calculate 40% the employee has worked in this state. There is no particular logic and calculation until if you have really a valid time tracking tool. Okay.
You constantly have to change this?
Right. We have to change this value based on the work, but I will also find if there is any formula exists for that.
Okay.
Okay, system still holding better. Let's hold here. Okay, these are the topics only we discussed. Again, I will explain about tax percentages. Few things I put on hold since I also have to review ways to mapping, ways to document generation, and also 401k benefit deduction configuration, a overview of 401k limits and plan configuration. I will pick up in tomorrow session. Thank you so much. Please take care and stay safe. Bye.